Hello everyone. This video, the essence of this recording is to break down the whole components of how to read the MacroLab FX weekly um, uh, um, um, reports, okay, or weekly outlook, or call it weekly outlook, not really reports, okay. So the essence of this recording is to ensure that for any person who come across this document, all right, we understand how to read it and how to use it for the trading week. So this particular document and this particular outlook is is only valid for the very week it's being sent out for each trading week. All right. So it means for every week in each trading month, we prepare a report as this and we send out to every of our users um, or anybody who is interested, to see what it is and probably apply it to their trading strategy, and all of that. And and I'm sure this could help, right? So this is very important for new users, those who are experienced in trading or intermediate, or those who or those who just want to know what the macroeconomic outlook is like for the week. And as you and I know that without the macro, very fundamental, the financial market is useless. All right. So let's dive into this quickly. So, of course, when you get this document, the first thing you will see is this cover page. And this cover page is not just a cover page, it contains a very vital information that will, of course, help you go further in dissecting or reading this document. So first you see, of course, MacroLab FX, the week macro and trading outlook. Now it contains events, levels, what to watch, and pair bias. All right, so I must actually state very categorically that this document or these are our outlook is specifically for USD markets, Euro, and UK markets. So we cover for just three G3 markets, and the pair outlook we look how to trade every week is only Euro USD and Pound USD. We don't cover the entire G10 market. We're very specific. We're very our call is being specific, and we're very focused on where we want to, make we want to focus on the core thing and make our reports actionable. Okay, so of course, you see regime. Somebody will ask, okay, what is regime? Regime is what tells us the market condition. All right, regime gives us a clue of the current market condition. Is it inflation driven? Is it interest rate driven? Is it oil driven? Whatever it says, is it monetary policy driven? Is it fiscal policy? So that's what you see. So regime gives us clue of what is happening in the market and what we should anticipate, all right, and what could be the market, condition, right? That is what the regime is. So the primary driver for this week is still oil, and we look at the yield, we look at the growth, okay, because these are the key components that will drive the market for this week and perhaps beyond. Now, the key risk is someone will ask, what's the key risk? The key risk is what could be the case that will make this outlook not to hold. Okay, so when you see key risk just tells you that, okay, we're looking towards this way, but this can actually make the whole outlook move the other way. So that is what the key risk is saying. Then, of course, the report is valid. So this is from 20th to the 4th April. This is our edition. We have issued 3 weekly reports so far, volume 2 for the month. Then this is published on Sunday, which is today. Then the pairs we cover is Euro USD and Pound USD and all of that. Okay. So let's dive into the second page. So this is a 10-page document. So let's dive to the second page. Before I continue, I want you guys to understand that this is this document does not in any way recommend trading strategy. It does not in any way being seen as a financial advice. Is just solely and solely for what it is, for education and to bring clarity to trading. All right. So the first thing you want to see here is a week in context, and you see the monthly outlook alignment. Of course, we'll also um, provide monthly outlook. All right. Also provide monthly outlook for each month. Then we'll also provide weekly outlook for each of the week that's contained in that month. So this is where you see the monthly outlook. What the monthly outlook does is that it helps us to see, are we still in line with what we are looking for in the month, or we've drifted, and what made it drift, or what made it to still stay in line. All right. So you and I know that the market dynamics, the financial market is very dynamic. Anything can happen at any time. All right, but we'll have our monthly outlook that helps us mirror through the month, more like a top-down analysis. Because when you go to the chart, you do monthly, weekly, and all of that. Okay, so it's more like a top-down analysis using the monthly macro outlook for the month and what we expect the USD market to do for the month. That's what the monthly outlook alignment is all about. They will have this brief explanation. This brief explanation um, try to now think through the monthly alignment. What's happening this week? What's happening in the market? Does it in tune with the monthly alignment? And all of that. So that's what the this particular document contains. So it changes every week. Then we'll have the event calendar. Our event calendar is not just a regular kind or type of event calendar. All right. It's not just those one you see on Forex Factory or any form of event blog or whatever thing you find out there. Our event calendar is regime defining. All right. Is regime defining. I will also state why that event is important. Okay. So if you go to your very regular event calendars, you just see previous forecast, date, and time. All right. Nobody tells you what it is or what it means in that particular regime and context. But here we try to break it down in terms of regime and in terms of context. Okay. So now if you look at the tier one means those particular regime defining. So and our major defining events could be interest rates, labor markets, growth, inflation, you know, and of course the bond market, all right, depending, all right, but the labor market, inflation, and interest rate. These are the and labor market, inflation, and interest rates. Yes, so these are our three major defining regime events. So anytime we have the UK, the labor, inflation, all of that. So, but we do not. What this please also help you understand is that we not just trade off from headline news. No, we don't do headline. That's why we say why it matters this week. All right. So we try to say, does it affect the growth? Does it affect that? Does it affect this? For this week, you can see that this helps us to confirm whether the UK wage pressure is easing ahead of April 30 Bank of England decision, blah, blah, blah. Try to give context of why this matters. Okay. That's the essence of this regime defining event. So it's not just your regular calendar you see with previous and forecast, and everybody's running around to look out for the headline news. No, we'll try to, bring in context, okay, which is not seen, randomly online. Then the next page you will see here is very important, is our MacroLab FX focus points. Now it contains a three framework. Now this three framework is very, very important. It contains three framework. First of all, we look at the yield, the 2-year yield, and try to build a scenario, all right, around it, especially for Euro USD and Pound USD. What should be the case, and what should we expect from the yield market, which is the 2-year yield in particular. All right. So our focus point one is the regime transition matrix. So why this matrix matters more than usual? The market is at a genuine inflection point. So it just gives us a kind of a scenario that what are we expecting from the regime? This particular region, you're looking for growth price, right? So is growth improving? If growth is improving, inflation is falling, yield reaction, stable, slight compression, then we'll not expect, what should we expect if we stay on this particular kind of regime, right? So this gives you a view of what to expect in the market for that week. So if the base case is that okay, growth is repricing, why is growth repricing? Is it because of the oil is falling? Then we're not anticipate because the market is a forward-looking component, and we don't trade off from headline. We try to, expect what the market should price in the future. So this gives you a clue of what the market will do for that week without waiting for headline, news. That's the essence of this regime transition matrix. So if we wake up in the morning and we say, okay, this inflation dominates and growth is still weak, inflation is dropping, then we could see a strong bullish here. Then inflation returns, growth stays stable, inflation rising, then we could see a bearish Euro USD. So this gives you a quicker clue of what you should expect, for the week and what is the scenario, market sentiment. We could just quickly use this regime transition to build your narrative, for the week. So it's not just a regular kind of document. It's very concise, professional, institutional grade, and all of that. And it's absolutely for free for anybody to download and use. Now, how to interpret the regime transition? This just give you a clue of how to interpret the regime transition of the focus point one. All right. So this is the focus point two. So we'll try to now explain what that is. Okay, growth repricing, disinflation dominates, inflation returns. So if the market starts pricing growth repricing for the week, then we should expect this, which is our major target. The market will start pricing growth towards the few as we expect. So the focus point just tells you how to interpret the regime transition per week, all right? Because the regime changes, it's not stable. That is why a lot of traders does not know how to interpret the market in different regime. All right. Once you have a regime in check, you know what to look for in the market per week, per month, and all through the year. Okay. So it contains three informations, three tables, and depending on the region, we'll try to break it down here. These are our MacroLab FX notes, which is very important. Very important highlight. Now, here we said oil is a fulcrum this week. So this MacroLab FX note gives you a quick look of what the entire week will price on. Okay, it could be inflation, it could be anything really that is regime defining. Like I said, this is a regime defining table. This page, this particular page is a regime, which is the most important part you need to understand in the document for the week. All right, so we have the focus point two, which is the yield sensitivity guide. This yield sensitivity guide just gives us a clue of where the markets will price in long term, because yield is what holds, or what yield is what tells us what the market is going to do on the long term, market expectations and all of that. So this is where you could just get a quick clue of what we're expecting from the 2-year yield and generally the bond market. Okay. Then this is where you now see the pair outlook for the week, which is Euro USD and Pound USD. We'll try to now build a macro scenario around the two pairs we trade for the week, which is Euro USD and Pound USD. Then we'll give a very quick look. Then we'll give the regime bias. Our regime bias is neutral to mild bullish. These are our key level. This is where it's we'll just give a little bit background story on the technical perspective and the events risk for this week. I will also give the event risk of the week, the market setup going into the week, what should we expect, and and all of that. And the same thing for Pound USD, and it gives you that clue of what the market is talking and what the market is saying we'll try to build a regime bias into it. And of course, you take, so are we expecting mild bullish and all of that. Then we now have risk to the outlook. This is on that important page. The risk of the outlook just tell us what could change the picture really, because of course, you can't be 100% sure of what the market could do, right? So this point just gives you a quick view of what could change the market. So if the market opens between Monday, Tuesday, are we still in check within the regime, or the market has changed? So this is what could change the market. The primary risk is false disinflation signal, right? It could be anything, right? You want to see the primary risk. The primary risk is where you want to see what could change. So for this particular week, we're looking at, okay, the primary risk this week is that the oil-driven disinflation proves temporary, while the reopening of Strait of Hormuz has eased immediate supply constraints. So this week, we're expecting the Strait of Hormuz and the oil talk and the geopolitical tension should, ease a little bit. We'll still talk about deals and all of that. So if we don't have any positive talk from the US, from the reopening of Strait of Hormuz and all of that, okay, the market will start pricing that, oh, that was a false disinflation talk, and we'll start pricing inflation back again. So if by Monday that's the case, or by Tuesday that's the case, you start repricing the whole thing. So while we are telling you that the market is going to do this, we'll also provide a primary risk that could say, no, the market will no longer do this, the market will start doing this. That is why it's a concise institutional grade macro outlook. So it removes guess from your analysis, it removes anxiety, it removes emotional decision making, and all of that. So that is primarily what it is. Then while the secondary risk is primarily we're looking at maybe any events, any sudden announcement, or anything that could pop up, or it could be a major event for the week. That is secondary risk. But what is key here is the primary risk. So you want to look out for the primary risk, understand the primary risk, and see what could change the dynamics. Okay. So if you want to get the whole full gist, you could, join our Telegram group. I think we have a Telegram channel. We're working on Telegram channel, and once that is done, we'll share that to all our community, so you can get updates all the time for the week and see where the market is going. All right, guys. So this is just to explain how to use and how to read the MacroLab weekly macro outlook for the USD, Euro USD, and Pound USD market. So I hope this video helps. I hope this video helps. We look forward for your feedback at any point you see this video, and how this solution and how this report has helped you to be a consistent, profitable, organized, and structured trader. Thank you very much. Bye.